Good morning, traders. It is Thursday, September the 12th. Taking a look at the charts, we got the SP 500, and if we look at the trend analysis chart here, we've gone from the SP 500 going in this consolidation phase where it needed to more or less break out above this level or below this level for a significant breakout. And we started to see the trend change. The market started to take off. We had a nice rally here with a nice bull flag forming. We ended up getting long and hitting our targets here to the upside, about 5% gain, just over 5% on that move. And if we look at the Russell 2000, the market is getting pretty overextended. We are up. Oh, this isn't the Russell 2000. Let me just go back. This is the SP 500 trading up near these recent highs. This is more or less the upside target we've been looking for. This 3,000 to 3025. We are. It poked up higher, pulling back this morning. So overall, most of this move has been done, the breakout move. Now, if we go to the Russell 2000, similar type of price action, just a bit different timing, give or take a couple days. Overall, we got into the Russell 2000 as it formed this nice little bull flag here, this three-wave correction, breaking this little previous low across here. We got long, we hit our first target, we hit our second target, and you can see how price is more or less going straight up. When you see price go straight up, as I mention this all the time, what goes straight up usually comes straight back down, at least for half of the move. The fact that we've gone straight up and into a very significant resistance area, I am anticipating some type of pullback. And of course, we want to scale out of plays as it moves up into resistance. We never know if the market is going to roll over at the first resistance or roll over at the second one. For all we know, it can continue to take off, but we want to make sure we get out and lock in gains at these areas because this is where the market can roll over and could just keep on heading down to much lower prices and negate all the gains that we've had. So overall, Russell 2000 is now overdone. This red hashtag here is indicating we are above that, which means the market has rocketed too far too fast, and there's going to be some profit taking. And the fact that we're in a resistance, it just goes to warn us that you got to be careful. There's going to be a bunch of people ready to cash out today and get out of their positions to lock up profits. Now, we had obviously some type of news this morning around 8:30. Could have been the jobless claims, or we saw the big spike in the markets. More or less, the dollar has popped strong. We're seeing metals have a big pop this morning. Gold up 1.7%, silver up 1.4%, other metals up 1.5%, and palladium up almost 2%. Overall, we talked about this 2 days ago when we got into utilities. Utilities gave us the early warning sign that looked like money was starting to rotate into the safe haven plays. Yesterday we saw metals and bonds, metals and utilities start to pick up speed. Today we're getting some follow through movement. Yesterday we got long the XLU, and it was the second best performing sector yesterday. It looks like it's set to gap higher and continue to run today. If the safe havens like metals, the futures are moving up, we should see utilities do the same thing. They are seen as a safe haven as well. So overall, if we look at the chart of gold here, gold had this nice deep correction, started to go into a neutral and downtrend. Now with this gap up, gold is trading at 1530, which means it has rallied up into this level right here, which means we're in a pretty significant resistance area. This is a key pivot zone on the chart where not only is it the 20-day moving average, which you can see kind of flattening and trading here, but it's a consolidation where the market came down, formed a bear flag, which is a halfway move, and then we had the second half of that move to the downside. So we're coming back up to resistance at the 20-day and resistance in price action as well. So we'll see where things go after today. This obviously looks like a news-based pop, and as we know, a lot of news-based pops fizzle back out, so we could see the market fizzle back down and potentially give us a nice setup in a session or two as our trend analysis will go back to orange, and we'll potentially get some oversold pullback, and then we can look to get long metals again. But at this point, the best setup for the safe havens was utilities. We got into utilities, And the last best setup we had was actually in the bonds. We did bonds, and we've danced around. We've done a few of these trades in the UGLD, catching 24% on the first one. We caught it up, I think it was 10% or 18% on the second one, and now we're long utilities. And we'll see where we go, but we're just moving around where the lowest amount of risk is and jumping between safe havens and equities, and that's just kind of the dance that we are doing. Now let's move over to, let's take a look. I'll just pull up silver. I know some of you want to see where silver is. Here's silver. Silver's from this really interesting pattern. If we look at this pattern, it's sold off with a bear flag, had the second half of that move. It's forming what could be a bigger bear flag, but again, it's having a pop today. So it has rallied up to 1844. It's not a huge, I mean, percentage-wise, it's still 1.5%, but when you look at the recent sell-off, it's a small recovery. Overall, we'll see where things go. The grand scheme of things, this could be seen still as potentially a bear flag, and we could start to see a continuation flush down in the safe havens if the stock market can find traction and break through resistance and take off to the upside. So we could still get a complex correction in A, B, C, and then we see some type of big base be built for a launch pad later in time. But we just play it one step at a time. Right now, silver is still technically in an uptrend. It's not oversold yet. We need to get this green hashtag, get down to that level, or we need price to consolidate and start to build a base. And we should see potentially an oversold level start to move up depending on how the technicals start to form here. Looking over at the dollar is up quite a bit this morning. It had a huge volatility. It's dropped this morning and then reversed and rallied. It's up 0.4%. So it's going to be trading up significantly higher, somewhere around somewhere up near these previous kind of highs here. Overall, we'll let the market continue to do its thing, but we are seeing money pile into the dollar. We're seeing money pile into metals, and this is we haven't seen this for a long time. It's been happening for the last few months, where the dollar and metals are moving up together. So it goes to show the U.S. dollar and the safe havens are where the money is flowing. Moving over to energies, natural gas. Natural gas had beautiful kind of reversal from a downtrend to an uptrend. You can see here we got this major long-term resistance on the daily chart, blew up through there. It's starting to fizzle down. We got some pretty good selling going on. We're going to be looking for some type of potential entry in natural gas again. Seasonality wise, I think this thing could build a launch pad, and the next big push could be potentially the $3 mark. So there's a lot of upside potential. Looking at our technical chart, though, we don't have a buy zone until we get down to this 238. This obviously this range here will adjust depending on how price consolidates, how volume and cycles come into play. We could end up getting a buy signal at a much higher price depending on how this flags out and trades going forward. Looking at crude, crude is down 2% this morning. Pretty ugly chart. We've talked about this. I'm not a fan of this noise. There's no point in trading a chart like this, in my opinion. For my style of analysis, it's just pure noise, and it's all over the place. And this is what I was worried about. You get a breakout, a false breakout, just like we've seen before. We get a break, we get a break. Each time it reverses in a big way. We had another break, and now we got three big sell-offs in a row for crude. And if you look at the trend analysis chart, it's gone from a downtrend to neutral to an uptrend to downtrend or neutral and back. It's all over the place. And this is just not my style of trading at this point. Let's go take a look at Bitcoin real quick. I talked about Bitcoin with Howie Street. We did a show yesterday. Bitcoin's all over the place too in terms of trend analysis. Don't really follow it with the trend analysis in that respect. It moves a little bit different. But overall, this is a huge pattern in Bitcoin. If we look at the price, it is seen still as a consolidation phase, meaning we've had a nice run up. Now we're in this giant pennant formation. As it gets into the apex, it becomes more unstable, and the odds of it breaking to the downside against this trend actually start to increase. But whichever way it breaks, it should be a fairly significant run. This rally and consolidation phase would technically bring us back up to 20,000 a Bitcoin, up to the previous high for a major double top. If it breaks down, we are probably coming down to the 8, potentially all the way down to the $6,000 mark. And if we were to just scroll back in time a bit here, the last major level here, the 6,000 mark, to me, this type of pattern, this type of range, this huge range, if you were to extend that same volatility range to the downside, it brings us back down to this really critical level. And there's a huge gap down here. Not that I follow Bitcoin with gaps, but this is when something huge happened. The market gapped, popped, huge volatility, took off, and I wouldn't be surprised if it came down into that area. So there are a couple major moves. There's a gap window here, which would be a first fill, and then we got a big gap window here, which would bring us back down into this 6,000 mark if it breaks to the downside. So it's Bitcoin can move really quickly. It can have massive percentage gains in one day, in minutes. So it's not easy to catch a breakout. You kind of almost have to get positioned beforehand and just hope it's a 50-50 bet which way it's going to go and hope you're on the right side. If you're on the wrong side, you're going to take a beating. So it is a tough one to trade the way it moves. It's a lot like gold, lingers around forever and then pop, the move's done. And you either get beat or you make some good money. That's about it for today. I don't know if I pulled up utilities. Just pull it up again. Utilities, very nice day, nice bounce off the 20-day. Again, looking at our chart analysis from the previous session, we got into this oversold buy zone, and it was the 20-day moving average. We saw a beautiful rally out of there. It's consolidated, and we hit our first target in the first day, up about 1.4%. And now we'll see if we're going to get some follow through, selling, and continued run. Anyways, that's it for now. Talk to you in a bit. Bye bye.